Bloomberg Audio Studios. Podcasts, radio, news. Bloomberg Tech is live from coast to coast with Caroline Hyde in New York and Ed Ludlow in San Francisco.
This is Bloomberg Tech. Coming up, TSMC reports third quarter results beating expectations and giving a positive outlook, buoyed by strong AI demand.
Plus, as trade tensions re-escalate between China and the US, could President Xi's rare earths hardball spark a global pushback?
And yet another exec departure from Apple, with its head of the ChatGPT-like AI search efforts going to Meta.
But first, Ed, we dig into the markets that are shaking off that trade anxiety and refocusing on the AI trade, of course. You discussed TSMC. We'll dig into it. NASDAQ up 0.75% with trading higher for 2 straight days. People focus on that and indeed potential talks between President Putin and indeed the United States president. But what are we looking at underneath the hood?
Yeah, TSMC, the world's biggest and most important contract manufacturer of semiconductors. The news is that it has hiked its sales growth outlook for 2025 for the second time this year. Then we look at the chart. We open up 2%. We've given off some of those gains. If you read on the Bloomberg Terminal some of the market stories, the early part of the morning was TSMC driving us up, positivity, but the trade story is overtaking a little bit. AI demand intact, Caro.
It is. Let's just talk about that being an impact. Bloomberg's Peter Elstrom, who leads our tech coverage from the US, Europe and Asia. And Peter, look, TSMC did almost what ASML did. They said, look, AI, the mega trend's still there, even if China pulls away in terms of demand.
Yeah, it's a little bit more than that. C.C. Wei, the CEO, had this conference call after the earnings results, and as Ed was talking about, they hiked their forecast for 2025 for the second time. Just 3 months ago, they hiked their forecast, and now what C.C. Wei is saying is that this AI megatrend is actually getting stronger. They, of course, are making the chips for NVIDIA and for many others too, and what they're seeing is that the demand for those chips is getting stronger at this point. They are watching the capital spending from some of the big customers out there, including OpenAI. They realize that NVIDIA is going to have to supply those customers, and the trends are going up from here. So we're starting to get a fuller picture of what's going on in the chips business. We got preliminary results from Samsung earlier this week, then we got ASML, the chip equipment maker, after that, and now we have TSMC, the biggest contract chip manufacturer, which is giving us a very strong forecast too.
That's kind of the demand side, right, Peter? But on the supply side, there was lots of interesting information. The two headlines that jump out at me are they're massively supply constrained, capacity is tight, but they're moving really quick to expand manufacturing capacity here in the United States.
That's right. Yeah, well, it takes a while to build these chip plants. They've begun construction in the U.S. a few years ago, and they've now said that they want to build on top of that. They want to expand even more than they have in the past. But they're trying to add capacity in the U.S. while they also build out their capacity in Taiwan right now. So it's taken a while for them to bring those fabs online and then meet this very strong demand that they're getting from customers like NVIDIA, also from Apple. They're supplying a number. They also make the chips for AMD too, as AMD tries to compete with NVIDIA. So they're really the big beneficiary. They're kind of the picks and shovels that are helping with this AI boom.
Look, we are looking at the ADRs a little lower, Peter. They're at a record high in trading over in Asia. Is there perhaps just a lot already priced in?
Yeah, that may be it. I mean, as Ed was talking about, there are a lot of factors going on in the market right now. The primary trading forum for TSMC shares is in Taiwan, so we'll see how they do tomorrow as they open up there. But the ADRs are getting buffeted a bit. Probably there are some high expectations going into this. I think investors did anticipate that there was going to be some pretty strong numbers from TSMC. But on top of that, there are a lot of trade factors that are playing into this. The U.S.-China tension certainly kind of overlay a lot of what we are seeing in the market right now.
Bloomberg's Peter Elstrom, thank you very much. Our next story is trade tensions between China and the US. Listen to what Treasury Secretary Scott Bessent had to say about how negotiations are going, and in particular about one top Chinese trade official.
We've had 4 rounds of talks, Geneva, London, Stockholm, and Madrid, and both sides approached them with great respect, and this individual did not. He showed up uninvited and said, quote, China will cause global chaos if the port shipping fees go through. So I don't believe that China wants to be an agent of chaos, and maybe they used to have the wolf warrior diplomats, so maybe he thinks he's a wolf warrior. We don't know.
This is happening as China's decision to unveil export controls on the rare earth supply chain is now sparking a global pushback. Bloomberg senior tech editor Mike Shepard joins us to break it all down. Based on what the Treasury Secretary was talking about and recent reporting, China sees its hand with rare earths as being leverage. In a negotiation, there are two sides, and the question, Mike, is whether China is or is not overplaying that hand.
Well, that is a big question right now in the market, and certainly here in Washington, where we're seeing the IMF and World Bank meetings being held and so many global officials in town to watch these trade negotiations unfold in real time between the U.S. and China with so much at stake. And the question is how much of an impact there will be on other economies. And the U.S. is banking on other nations, other trading partners, and other allies also feeling that pain and joining the U.S. in trying to counter whatever China may try to do in restricting the shipment and export of rare earth materials from China to buyers outside China. And that is something that will affect the European Union and other nations and Japan. And we have seen a push led by the U.S. to try to get the Group of Seven to somehow counter and respond to China's intention here. And look, what we're seeing is even as China is trying to exert some leverage, the U.S. is also expressing a little bit of skepticism about whether this will actually go through. Jameson Greer, the U.S. Trade Representative, said yesterday he doesn't think China will actually take this step owing to the geopolitical implications and the fallout it would have on the global economy. And we can see a sign of that skepticism in the counteroffer that the U.S. made. Ed, the U.S. was really only stepping forward with a longer pause in tariffs. And that's not nearly enough for what Beijing had been hoping for. They have been really angling to get a relaxation of years of export controls as a result of that leverage.
There did seem to be real anger coming from Treasury Secretary Scott Bessent there, Mike. And I'm interested as to reminding us how important the hand is that China has. When it comes to technology, the fact that they mine an awful lot of the rare earths, but the main point is they also produce and refine most of the rare earths.
Well, they do. They really hold more than half of the world's reserves, and they dominate the refining and production of these elements, which are critical across the economy in consumer electronics, in automobiles, and in military equipment. Think of night vision goggles. You can't run those without some rare earths. And so the importance of this is something that hits a nerve with trade officials around the world, but especially with the U.S., because American officials had thought the rare earths issue had been settled during the last round of trade talks. And here China goes, in their view, reopening it and trying to use it as a last-minute bit of leverage heading into this all-important meeting between President Donald Trump and his counterpart Xi Jinping at the end of the month. And rather than seeing a narrowing list of trade issues to be resolved heading into that meeting, we're actually seeing a growing list. And you heard the Treasury Secretary talk about the sensitivity around shipping. And there is also the question, Carol, of the U.S. move to expand coverage of sanctioned firms to include subsidiaries. And that's something that hits some of the Chinese champions like Huawei and SMIC. And that is something that Beijing also has objected to. And we've seen this all play out just in the last few weeks. And it raises questions, Carol, about whether the two leaders can actually sort all of this at the end of the month, if and when they sit down. If
is a big if right now. Mike Shepard, thank you very much indeed from DC. Look, amid this geopolitical tension, you are still seeing the markets relatively calm. I'm looking at the tech markets up 0.7% on the Nasdaq 100. We've been whipsawed a little bit about the concerns on resurgence, trade frictions more broadly, but the AI real feel factor is still there. Angelo Kokafis is with us, Senior Global Investment Strategist at Edward Jones. Today, is AI winning out?
It is a good day for technology. The TSMC results and guidance provide some confidence in the durability of the AI theme. There's no AI-related slowdown, at least not yet. And AI is going to remain a key driver for markets.
Angelo, one of the most read stories today on the Bloomberg terminal and on the website is Ken Griffin, the founder of hedge fund in Citadel, saying that Gen AI is not helping hedge funds beat the market with astonishing returns. We're going to pull up what it is that he said. But as somebody that is in the markets, as a strategist, your reaction to that news story, and also, what? Gen AI better than you in strategy?
I don't think we're quite there yet. We are still, in our view, in the early stages of adoption. Of course, there's a lot of spending going in now to make this technology and incorporate it. But thinking about major technology firms and really many different businesses, including in finance, they are all rewiring their operating system to incorporate AI. So it will take a little bit while to see productivity gains, but we do think that these gains are on the way. Of course, from an investment standpoint, we need to be wary of complacency or euphoria. At some point, there's going to be increased competition, some overbuilding, overcapacity. We are not quite there yet, but something to watch out for. And I think the reaction in the TSMC results in the stock today, the muted reaction reflects the high expectations.
So they're two very distinct stories, right? How market participants use AI and then the impact of the AI story on markets. But you went there with TSMC. So what did that sort of outlook from them tell you about the staying power of this cycle?
Yeah, I do think it provides confidence that this will continue, especially thinking about the next 6 to 12 months. Only the direction of travel for spending is higher, and there's a lot of push for many different businesses and industries to incorporate AI. So I think the mega trend of adoption remains alive and well. And yes, we can debate all day about valuations, but the results speak for themselves, especially as we enter a key earnings season.
We don't have all day, but let's debate. Where would you go if valuations are high for some of the big names?
So we favor a barbell approach. So having continued to participate in this AI long-term secular theme, as I would call it, but at the same time, for especially new capital, start to complement portfolios with areas of the market that have been left behind. And that could include value-style investments, small-cap stocks that may benefit from the Federal Reserve rebooting its rate-cutting cycle. So having this balanced approach, and again, avoid chasing some of the unprofitable, more speculative parts of the market.
What is the catalyst for those speculative parts of the market to actually be pop? Do you think that we can remain irrational for a little bit longer if you see it that way?
You know, as they say, you can only tell a bubble, kind of with the benefit of hindsight. But at the same time, there's some key differences between now and the late 90s. A lot of these companies that are doing all this heavy spending, they're financing that from their own cash from operations, so not debt financed. They're very mature, profitable businesses, and they have a diversified stream of revenue. So we're not quite there yet. Valuations are not at extremes. But at the same time, markets are going to be sensitive to any news about return on investment from all this spending that is taking place, and also paying attention to signs of euphoria, which we do not see yet.
In this environment, Angelo, I think we should continue to talk about tariffs. The idea when the president took office in January was that consumers would take on the burden of tariffs, right? Because companies would raise prices across all sorts of domains. That hasn't really materialized. What has been impacted is the labor market in different ways, either people cutting back. How are you reading that play out right now?
So a couple of things here about prices. As we navigated the period of high uncertainty, especially in April and May, companies really tried to absorb a lot of that and not pass these increased costs to the consumer. Now that we have a little more clarity, we may see a little more even distribution of this increase in costs. We have seen goods prices increase, but at the same time, the uptick in inflation remains manageable. Now, as it relates to the labor market, we remain in a low hiring and low firing mode. The labor market remains balanced. Corporate profits remain at record highs, even as we've seen a significant slowdown in hiring, which to me implies productivity gains. So we do not expect a major uptick in unemployment. Companies remain very profitable, so they have really no pressure to continue to cut costs to protect margins, because margins, again, are at all-time highs. But something to monitor. There's going to be some disruption from AI, but so far it seems like only a small part of that slowdown in the labor market is because of AI or tariffs, for that matter.
And I ask you that because that takes us nicely into earnings season that's about to hit us hard next week. Angelo Korkafas of Edward Jones, thank you very, very much indeed. Okay, coming up, Salesforce looks to reinsure investors worried the company could lose out in the AI boom. We have more on Salesforce next. This is Bloomberg Tech.
Salesforce shares. As you can see, they spiked this morning after Chief Financial and Operating Officer Robin Washington had said the company expects to return to double-digit revenue growth in the coming years. For more on the company's outlook, let's bring in Bloomberg's Brody Ford, who covers enterprise software companies. It's still down a quarter so far this year in terms of its market cap, but some reassuring points to re-acceleration of growth.
Exactly. I mean, this is a stock that was beat up 30% year to date yesterday, and so it's up 7% today, and that's pretty cool, but it's still, investors are a little anxious whether these kind of traditional application leaders like Salesforce are going to be the ones to successfully sell AI products. We got a decent outlook from Salesforce yesterday, but, it's not a resounding celebration at this point.
You've been reporting on the close relationship between OpenAI and Oracle, and how maybe the publicly traded, and at this stage slightly bigger of the two, is helping that company navigate chip export controls. What do we need to know?
It's interesting. I mean, Oracle's kind of a famous lobbyist, right? They know Washington. They're pretty tight with the Trump admin right now. And yesterday, OpenAI said, when we're having trouble getting chips into UAE or Argentina, we call up Oracle, and they're the ones that have kind of been able to help us get our chips around the world. And we found that pretty interesting because Oracle is playing an increasingly large role in OpenAI's infra build-out.
Bloomberg's Brody Ford across a lot of stories. Thank you very much. Another top story. Apple can't catch an AI break. The executive who is in charge of developing a ChatGPT-like search feature within Apple is stepping down and heading to Meta. That's according to sources. For more, Bloomberg's Mark Gurman, who broke that story, joins us now. Who is this executive, and how significant is it, Mark, that he's jumping to Meta?
Yeah, this is Qi Yang, and to give you an idea of how significant this is, we've talked about maybe a dozen Apple AI departures over the last few months. This is probably the most significant or second most significant of that group. This person was a direct report to John Giannandrea, the senior VP who runs all of AI at Apple. This person was actually put into the role only a few weeks ago when his predecessor, Robbie Walker, left Apple. Walker had been in charge of Siri, but he was removed from being in charge of Siri in March after the major delays and the blowback against Apple Intelligence. And then he started a new team called AKI, Answers, Knowledge, and Information. And that team is focused on AI-powered web search tools. So basically adding ChatGPT, Perplexity, Gemini-like functionality to Siri and other parts of the Apple operating system. And Yang, he became in charge of that program just a few weeks ago. Before that, he was running the search-related functionality. Then he was running the whole thing. And so now Apple's AI team is going through another major reorganization in light of that significant departure.
And a key line in your story is several of the Apple team members think that this is going to continue to happen, more departures to come.
This is going to keep happening. I mean, the core team developing the models underlying Apple Intelligence, it's a team called AFM, or Apple Foundation Models. They've been bleeding talent since July. The creator of that team and the person who ran that team, Roman Pang, he left for a $250 million multi-year pay package and is now a senior AI executive at Meta. Since his departure, they've lost about a dozen people. I'm told there's several other people on that team continuing to interview. Other people are going to Meta still. Other people are going to startups, OpenAI and Google. We've been reporting this out as these departures have been happening and these new companies have been hiring these folks. And this is going to continue given the pay packages that these competitors are offering and given the embarrassment that Apple's AI efforts have become for some of these people actually working on them.
Mark, you've come on Bloomberg Tech and you've broken all these stories about people departing Apple. A reasonable question, and we just have 60 seconds, is there actually anyone left at Apple of note working on AI?
Oh, Apple has tons of folks. They're working on acquisitions to try to refuel the ranks there. John, G, and Andrea, despite there being rumors and discussions about him stepping down or being pushed out of the company for several months now, he remains in charge. He may not be there for long, as I'm told that Apple has been looking for outside replacements for him, but for now he's there. Craig Federighi, who runs all software engineering, has now taken an ownership role over all the AI strategy at Apple. Mike Rockwell, who created the Vision Pro, he's heavily involved in the AI strategy there now too. So yeah, they definitely have folks, but it's just about refueling the ranks and putting the right people in place. But certainly this is another considerable setback to Meta's gain potentially.
Mark Gurman, as always, we thank you so much for joining us. Meanwhile, coming up, potentially catastrophic breach of a US-based cybersecurity firm. It's being blamed on Chinese state-backed hackers. That detail and the fallout next. This is Bloomberg Tech. And it's time now for Talking Tech. And first up, US cybersecurity provider F5 disclosed that nation-state hackers from China breached its networks and gained long-term persistent access to certain systems, including source code. Now, the breach prompted warnings from the US and UK authorities describing the attack as a significant cyber threat that could be used to exploit vulnerabilities. Plus, Uber is giving some drivers in the US the option to earn money by completing tasks related to the company's new data labeling business. This is an area where the rideshare giant sees an opportunity to shine in the AI boom. And Microsoft is pushing Windows users to talk to their computers. So the company is rolling out a new AI voice feature activated by saying, "Hey, Copilot." It's part of a broader effort to rebuild Windows around AI, including expanding use of tools including Copilot Vision, which lets software see what's on a user's screen. Ed.
Okay, coming up, we've got a riddle for you. How do stocks get weaker and more valuable? More on how the AI boom's impacting equity dilution next. Also, a quick look at markets, right? The story has been split between the early part of the day where TSMC's outlook was really boosting us, but TSMC's US-listed shares at least have fallen away. The market is modestly higher. There was some sort of nervousness and now calm about what is happening in trade talks between the US and China. We'll continue to track those stories throughout the remainder of the show. This is Bloomberg Tech. Welcome back to Bloomberg Tech. Our top story is TSMC, the world's biggest, most important contract manufacturer of semiconductors. Its US-listed shares are now down 1%. They had opened up 2% and quickly fell away. The story is that they have, for the second time this year, hiked their sales growth outlook to the mid-30% range for 2025. And the writing on the Bloomberg terminal is really clear. That's given the market at large a lot of optimism about the outlook for AI and demand. Remember, TSMC is the contract manufacturer of NVIDIA chips, as an example. Not doing much for their own US-listed shares, though. It's an important one that we'll stick with, Kara.
We will. But let's just turn our attention back to that riddle that you left us with, Ed. Because usually we see a company's equity gets diluted. We tend to see investors sour on the stock, but the AI boom has turned that on its head. Take a look at Intel shares. August is when the chip maker began selling new equity to the US government, SoftBank and NVIDIA. According to Bloomberg calculations, that waters down the stake of existing investors by around 14%. So why are shares up so much? Bloomberg Markets reporter Carmen Reinecke has been answering the riddle. And it's just all about the AI boom?
Yeah, it really is. So it basically boils down to, Intel was really not doing very well. Its stock was very beaten down. There was a lot of worries about how the company was going to turn itself around. And this new influx, this new cash on the balance sheet is really positive. And investors are saying, basically, we'd rather own 85% of something than, 0% or 100% of nothing, right? So it's basically this idea that this is going to help the company grow more, that it's going to do better in the future. And so taking a little bit of dilution on the profits is okay for now.
Carmen, this is about hype and the golden tickets of AI, right? You write in your story about AMD gets its partnership with OpenAI, Intel gets its partnership and investment from NVIDIA. The stock story is history from that point.
Yeah, it's so true. And AMD shares are up, just as much, 43%, since that deal was announced. And, Intel's been up 90% just since the end of August. So we're seeing so much enthusiasm about AI. And all of these deals, even though they're in such rapid succession, have been really beneficial. Investors are excited about it. They want to be buying into these shares, and they want to see the growth going forward.
Bloomberg's Carmen Ryanicki, thank you very much. Meta has announced plans to build a new gigawatt-scale data center in Texas, committing more than $1.5 billion to the project. The investment marks the social media giant's 29th data center and underscores its push to keep pace in the rapidly evolving AI race. The news comes amid a wave of major data center announcements yesterday, including a Microsoft N-Scale partnership, a new collaboration between CoreWeave and Poolside, and a $40 billion consortium acquisition of Aligned Data Centers. Here to discuss the AI data center further, Nancy Tengler, Laffer Tengler Investment CEO, who says, quote, "It's about the power, stupid." Okay, hit me with that thesis.
Oh, Ed, you always find the right nugget to pull out. Yeah, well, look, there's expected to be, OpenAI has said they need 20 gigawatts of power. At 16 billion per 2 gigawatts, that's a fair amount of change. And then you have all of these, just using Texas as an example, you have all of these companies opening data centers in Texas. It's kind of the perfect place. Horizon is the only one that comes with its own power source, which is natural gas on the Mitchell family Longfellow ranch. And so that's great news, but a lot of power is going to be needed for the rest. And Texas already has a grid problem. So we are looking at Laffer Tengler at names that can solve some of the data center problems and some of the grid problems that are coming with this major build out. And photonics is a hope. We're not yet there in reducing power consumption. And build outs are critical. What we heard from Oracle recently from the co-CEOs was that, it's not about demand, it's about supply. They can't get these data centers built fast enough.
Let's go to the promise of photonics, because you're already looking at a particular company, Cohere. Remind us of what the thesis is there, Nancy, and how quickly you think it can become a reality.
Yeah, so that's the question, Caroline. Coherent is, really focused on building photonics around the quantum computing needs, which is just going to add another layer onto this whole power question. And so what we've done, we've launched a new strategy called Macro Cycle Opportunities, and we have 4 themes: space, robotics, quantum, and nuclear. And in that, we are trying to identify the companies that are going to drive the next wave of transformation, overlaid with AI, because it's essential to many of those themes, or most of those themes. So Coherent's one. One of the other names that is important to us is not a photonics name, but is Quanta Services. We own that in our 12th best. We own it in Macro Cycle, and we own it in our growth portfolio. They've got a $36 billion backlog in modernizing existing grids or power providers.
Nancy, you're doing what so much of the market is having to do right now, which is have a lot of hope baked into these forward-looking, not only promises of the actual returns on investment in AI, but promise of photonics, promise of quantum. What is the fundamental research you bring to bear to be like, these are good bets?
Well, so what we've done, and I didn't answer your question on timing. I don't know, Caroline. I mean, it could be, the expectation is it could be a decade, but we've seen things accelerate so quickly. And the Exelon CEO at AI World yesterday said we're going to see more transformation in the next 10 years than the last 100. But what we've done in constructing the portfolio is we've established leaders, and they are about 40 to 50% of the portfolio. So think in quantum, IBM, which is a pretty low risk business model, and then the enablers, which is a coherent, and then the speculative names, and that would be IonQ, Rigetti, all of those names. So the objective is, and that's 10 to 15 to 20%, and the enablers are 20 to 25. So we're trying to mitigate risk by build positions in existing technologies that are already producing earnings, and then couple that with names that are speculative.
Right. Nancy, we started this conversation about the news of Meta's latest or 29th data center, a gigawatt in Texas. You have the small, if my Bloomberg terminal data is correct, position in Meta, but they are not a hyperscaler, right? So how do you view that build out that they're doing and the attractiveness in the broader thesis you've just outlined to us?
Well, so we do own a very small bit, Ed, but if you recall, we've talked about this in the past where we sold the majority of our holdings because we felt like the business model, and we were wrong, by the way, we felt like the business model of advertising was not where we wanted to be, and then they pivoted to AI, and I think that's what's driving these investments, and they've been pretty successful at attracting a number of high-level executives from many companies, but in particular Apple. So I think that for us is, we pivoted to Spotify. I think we actually did better with Spotify, but the point is that we missed the Meta run. And I think the question now is, can they convert it to revenues? And I think that's going to be the challenge. However, Mark Mahaney just published a piece that shows EBIT per employee and revenue per employee at Meta, Amazon, Microsoft, and Google is up massively, and that goes to the bottom line. So I think the jury's still out on how they're going to monetize all of this, but we'll see. I mean, they're making the investments in people and in CapEx.
Right.
So.
Nancy, just very, very quick, is Elon's pay package going to get voted through?
I think so. I hope so. I like to be aligned with the CEO as a shareholder.
Nancy Tengler, we appreciate it so much. Lafa Tengler Investments, great to have you on the show. Coming up, the CEO of startup Upgrade joins us to discuss the company's latest funding round and what changed in the fintech market since his days running Lending Club. This is Bloomberg Tech.
Fintech startup Upgrade has just closed a $165 million Series G funding round that gives the company a $7.3 billion pre-money valuation. Upgrade, which offers mobile banking, credit card, and other financial services, was founded by former Lending Club CEO and co-founder Renaud Laplanche. He joins us now in San Francisco. Over the last couple of years, actually, Caroline and I have tracked very closely the valuation of private, I wouldn't even say just fintech, it's more specific. Modern banking services, multi-platform offering. But just to start, why raise that money? What do you need it for? How does it help out with growth?
Yeah, so we're in the fortunate situation of being cash flow positive, so we didn't need necessarily to raise capital.
Yes.
But as we think about the evolution of the company, we're sort of getting closer to taking the company public. This is probably our last sort of pre-IPO raise. So it was a good opportunity to sort of check on where we stood in terms of building up shareholder value, and also create an opportunity for liquidity for existing employees prior to an IPO.
That's quite a definitive statement, our last pre-IPO raise. So you have a plan in place and a roadmap to do that?
Yeah, I mean, no certainty. Obviously, it always depends on the market and on our own sort of growth in the next 12 to 18 months. But we're feeling good about the direction we're going.
Renaud, what's so interesting is the way in which Upgrade gets new customers. In many ways, you're cash flow positive, because I'm in many ways looking for that profitability metric, because you don't have to spend loads on marketing because you partner with big businesses. Just tell us about how the business model has helped you weather what has been a real downturn for other neobanks during the 2021 earlier era as well.
That's right, Caroline. That's really what makes Upgrade unique. It's our multi-product, multi-channel strategy. So we're fortunate to have 6 different products: mobile banking, credit cards, personal loans, and then sort of indirect products like BNPL, home improvement financing, and auto loans, where we work with partners to deliver financing at the point of sale. And increasingly, these sort of indirect products are really of turning into good sort of source of customer acquisitions, where we can acquire a customer through an auto loan at a local dealer, or through a home improvement financing at a local roofer or person who sort of install new windows. And then these become Upgrade customers, and they can sort of in turn sort of benefit from all Upgrade products, including credit cards, including mobile banking. So we really created that sort of ecosystem that benefits from multiple products.
And many know you from Lending Club. Was it those relationships that helped you on the other side? Because you repackage these loans, perhaps sell them in bulk to, well, a community bank if it's relatively risk-free, or onto a private equity house if it's relatively risky. And I think auto loans come to mind when we're thinking about risk at this moment.
That's right. So we've, I think, helped sort of provide 45 billion in loans since we started. It's not all on our balance sheet. So we are certainly sort of selling loans to loan buyers, and that includes a very broad range of buyers, from small banks and community banks and credit unions that are going to focus on the sort of safest loans, to sort of private credit funds, securitization structures, where you can allocate the risks differently, and where sort of investors might be sort of willing to chase higher yield.
Renaud, jurisdictionally, would you just reflect on the experience of leading this company and this startup? What is it like being a neobank under the Trump administration, for example? Are they friendly and cooperative in the things that you want to do versus their governance of traditional banks?
Right. So, yeah, it's certainly a very business-friendly environment right now, but some of that translates into maybe a little bit less stringent sort of regulations at the federal level, but lending is also regulated at the state level. And I think whatever sort of relaxed standards we're getting on the federal stage, we're not getting at the state level. So state regulators, I think, filled that vacuum left by federal regulators to a certain point. So I don't think there's a sort of meaningful change in how sort of tight the regulatory environment is.
Renaud, memories are short, but I just want you to reflect for a minute on Lending Club and what you learned there briefly, because there were issues there and you did have to step down. I'm interested as to what you've learned from it.
Oh, yeah, so much. So I think the Lending Club was really the first sort of phase of fintech, right? It was really sort of building up an entirely new industry with sort of very uncertain regulatory and compliance framework. Upgrade, 10 years later, has really been part of that sort of second phase of the industry, where there's more of a sort of established framework, established rules of the game, and I think we've all been benefiting from that, and the fintech industry has been sort of able to grow and now really sort of be a sort of strong challenger to the sort of more traditional banking industry.
Appreciate the answer, Renaud Laplanche, Comeback CEO of Upgrade. We thank you. Now coming up, Anthropic reportedly looks to raise even more money, particularly from the Middle East. More on that next. This is Bloomberg Tech.
Anthropic is reportedly in talks with Abu Dhabi-based investment firm MGX to raise additional capital, just weeks after completing a funding round that valued the AI startup at $183 billion. All according to sources. CEO Dario Amodei met with MGX executives during a recent tour of the Middle East. Joining us is Bloomberg's Shireen Ghaffari. This is something you and I have been reporting out together. The way I'd summarize it, you give us the details, is need money, need compute, make some friends across the Middle East.
That's right. It's never too early, I think, for these AI companies to start thinking about the next funding round, even if they're weeks before they've closed the last one. And, we're talking about, the billions at this point. Anthropic's last round, they raised $13 billion at $183 billion valuation. If you're thinking about what kinds of pools of capital are out there at that scale, the Middle East is increasingly sort of one of the only remaining pools that's going to make those kinds of investments at that level in these still unprofitable, still somewhat seen as risky, right, AI companies.
Shireen, what's interesting, and as you and Ed make clear in the story, is Qatar had been a pool of capital for them previously, but they had to make amends for previous choice words when it came to other Middle East pools of capital.
That's right. So Anthropic CEO Dario Amodei has, in the past made comments. There was a memo to his own staff saying that, acknowledging that sort of fundraising or that they would be taking money in the Middle East, and that there are trade-offs there, and that the company would sort of have to come to terms with the fact that not everything that they do will always be helping democracies, that it may help dictators. And so, of course, with the Middle East, having a different sort of set of governments, that is a new reality, I think, for these CEOs of AI companies, that they may be making deals with countries that have different and maybe more undemocratic systems, right, than here in the U.S.
Shireen Ghaffari, we thank you very much. And let's just stay with Anthropic, because the AI startup founded by former OpenAI executives, of course, we just mentioned Dario, there's also Daniela Amodei, and a handful of others, is under new scrutiny from the White House as it doubles down on its mission of building safe, steerable AI. White House AI czar, that's David Sachs, took to X, accusing Anthropic of running a sophisticated regulatory capture strategy based on fear-mongering, and blaming the company for fueling a state regulatory frenzy that's hurting startups. Topic of Dave Lee's latest Bloomberg opinion article, and he joins us now. And David Sachs was responding to a recent essay written by another co-founder of Anthropic who'd come from OpenAI. And let's just talk about what Jack had been posting.
Yes, this is Jack Clark, one of the co-founders, their current head of policy as well. And in this essay, he goes over some of his fears about AI, and he makes a lot of metaphors around sort of being scared of the dark, essentially, as a kid, and sort of comparing the future of AI in some ways to the dark, and not quite knowing, what shape it's going to take, what the risks are. And it seems, this isn't the first time David Sachs has kind of spoken badly of Anthropic. And what it's doing is scratching this itch that David Sachs and it seems the White House has, that Anthropic is kind of separate from the tech world in a lot of this. We're not seeing Anthropic leadership at many of these White House events. They're not going to, the Middle East with Trump in the same way that Jensen Huang has. And they're certainly not handing him a small trophy like Tim Cook did in the Oval Office recently. That now has kind of put a bit of a target on their back, I think, as this sort of standalone AI company that likes to think it has perhaps stronger principles on safety than OpenAI and some of the others.
Dave, this is a story that's in the zeitgeist, to borrow a Tom Keenism. It's playing out on social media. There are other people beyond David Sachs weighing in on it. Again, it's a little bit repetitive, but just explain the grievance, the issue here that these kind of tech figures have with Jack and his essay and Anthropic.
Well, look, there was for the longest time these sort of two camps in AI, that one would say, slow this down, let's do this deliberately, let's do it safely. The others say, no, let's be accelerationists, let's just innovate as quickly as we can and treat the problems as they come and solve some of these problems with AI. And the way that's going to manifest it in a more practical sense is that you have states like California that have recently made into law several bills related to AI. One in particular was Senate Bill 53, which is about transparency, is about protecting whistleblowers. Anthropic stood alone in endorsing that that bill. OpenAI sort of begrudgingly said they could live with it after the fact, but Anthropic was the only company to say, yes, we think this is a good idea. Now, their preference would be for a federal law that would stop there being individual laws in different states around the country, and that's obviously what David Sachs wants as well. But Anthropic are saying, look, if you want to do a federal law, let's see it. Let's have it in Congress. Let's see what that is. Until then, we're happy to back what little legislation is happening in California, even if that means it might make things more complicated for the AI companies.
Bloomberg opinion columnist Dave Lee with the latest. Thank you very much. That does it for this edition of Bloomberg Tech, Caro. What an edition it was.
It was, and yet more focused on data centers and indeed on growth of AI. Do not forget to check out our podcast. Find it on the terminal as well as online on Apple, Spotify, and iHeart. From New York, from San Francisco, this is Bloomberg Tech.